Let's continue the drive talk, the driving analogies here a little bit. One state is out to reduce speed-related crashes and fatalities. Virginia, they're considering a new law that will require certain convicted reckless drivers to install a governor on their car. Essentially, it blocks them from going over the speed limit. Look, while we can physically control our driving speed, a lot of retirement savers feel like they lack the same control when it comes to their portfolio. We've heard you talk about using cruise control or a gas pedal at retirement. Can you explain the difference and when the right time is to use each approach?
Yeah, when you think about gas pedals, cruise controls, I think about the fun, awesome stuff of classic cars where the government can't get in and put governors on cars and install devices to control things as well. A side note, we have coming up at America's Retirement Headquarters in June, we're going to have a car show here at the office. If you have a cool car, whether it's a classic or a fun car, you want to come out to the car show, just go to arhq.com. Click on the events tab. You can register for our car show. It's going to be a fun day. Hopefully, have some beautiful weather and some beautiful cars that come out for that event. But when it comes to investing, I think of the term cruise control versus gas pedal and which investment strategy to use either in this environment or close to or in retirement time. I have, as many of you know, two young kids. They're not quite young anymore, but I still feel like it. And
Sure.
my 18-year-old at Anthony Wayne, I remember when he first got his driver's license and he was 16 in November, and he was driving and he would drive himself to hockey practice. I probably give, my wife the most credit because she would go down with him during normal nights and drive him down to Bowling Green to his hockey practice, and she'd sit out in the parking lot and wait for him to get done. So on one, it was really nice for him to be able to get his driver's license so she didn't have to drive down there all the time. At the second point, it was kind of scary because we know, a new driver adapting to market conditions can be scary. And a lot of times there can be crashes, and, crashes can be costly and sometimes painful or deadly. And so, kind of puts a little bit of that fear. And so when you're thinking about retirement, crashes, damages can be painful and deadly. And so we want you to understand about the two different approaches. I'm going to call them the cruise control or the gas pedal approach. And, when we look at the cruise control approach, I would say that it is kind of a common approach that is used by many people in their 401ks today. And it's when you're invested in usually those target date investment accounts. And if you have a target date investment account, essentially what it says is that they're going to set the cruise control at a set miles per hour. And regardless of what the conditions are in the economy, they're going to cruise at the same speed. And then as you get closer to retirement time, maybe you become more at risk adverse. They will adjust it in terms of what is commonly called conservative, moderate, or aggressive. It does work best in many situations, I think, when you're younger. My oldest son, Andrew, he's worked here at the company for the last couple of years. He's in our 401k plan. He really doesn't need his 401k for many, many years. And being only in his 20s, I think an aggressive cruise control plan probably works really well for him because near term, it doesn't matter so much so what the market does. He's at a point where he's trying to save and accumulate as many shares as possible. So the sequence of return really doesn't hurt him. But on the flip end of the scale, I had somebody had come into our office. She had retired 3 years ago. When we looked at her plan, she had, like most normal target date retirement accounts, an overwhelming majority of her money invested in fixed income. And the fixed income part of her portfolio, she had fees, expenses, and the yield or the interest that she was earning was actually quite a bit lower than what you could get in other fixed income investments today because the interest rates are higher. So we were able to take our overall speed down from 38 miles an hour to 29 miles an hour by having more fixed income and things that aren't subject to risk, like stocks still have risk, bonds still have risk. When you have things that are not in the stock and bond market, you can have more, protection of your plan. So bringing that risk level down and decreasing her score by 9 miles an hour. If you think about getting in an accident, at 38 miles an hour versus 29, a 29 mile per hour accident is probably, less costly, less painful than going 38 miles an hour.
Mhm.
The other approach that we use is called a gas pedal approach. And, I also love the gas pedal approach, and I really like it for people that are more close to or in retirement time. And so, with the gas pedal approach, what we do is we're looking at near term market conditions and we're being adaptive to what the market conditions are based upon economic trends, the market conditions. A good example of that is we look at one thing, is the moving average of the market. So we saw back in February that the markets were breaking below the moving averages of the market. That could be one reason that would be an indicator to let off the gas pedal, reduce risk. So as we went into some of these near-term major sells off that we've had in the market, we went from going maybe 70 miles an hour back down to 40 miles an hour. And so the gas pedal approach works with somebody that is wanting to be more adaptive to current market conditions and, be a little bit flexible. What I don't generally recommend is people, have an all in or all out type of an approach, meaning that I see some investors that'll slam on the brakes and go all the cash when the market looks bad, and then they'll push down the gas pedal or go all aggressive when they think things are going to go good. And, it's like, again, slamming the brakes on your car and then punching the gas as fast as possible. May be fun if you're wanting to, burn some tire tracks down a side road when you're a young kid. But as you get older in life, that is not a retirement strategy. So the retirement strategies that we can help with is that cruise control or the gas pedal, and helping you figure out what strategy to implement in your plan right now is exactly what we do here at America's Retirement Headquarters.
There's a time and place to utilize each strategy, and I know that does seem like a pretty ambivalent answer, but it really depends on your personal circumstances. Find out for yourself what the best approach is going to be by setting up a time to speak with America's Retirement Headquarters. 419-794-3030. Start that complimentary conversation. 419-794-3030. Or go to the website, which is arhq.com.